Hello and welcome to another update video about MATIC. MATIC has shown a bit of a pullback yesterday. That's not a problem. We are still above main support, which is at 58.3 cents, as well as above micro support at around 71.5 cents. So we're going to take a look at that in a minute. Overall, still a bullish scenario that I'm tracking here on the MATIC chart. I've got a 5-wave pattern to the upside, still unchanged from the September lows into the December highs. That's quite a bullish structure. Then 3 waves down, it's a corrective pullback into the support zone highlighted in yellow between 58.3 and 80.5 cents. Remember that as long as we're holding the 78.6 retracement level, which is at 58 cents roughly, and we do not get a sustained break below that, we should be looking at a third wave rally towards round about $2.12 plus. That would be my minimum expectation for a third wave. Better is $2.42, which is the 1.38 Fibonacci extension of the wave 1. Further extensions are always possible. The bull market target for MATIC is, by the way, $10 plus. No, not $10 plus, $10 roughly. Yeah, not necessarily higher. Okay, but that's good enough, I think. Obviously, MATIC has not yet really rallied in a third wave, so there's a good reward to risk ratio here for anybody who is interested in trading the main third wave to the upside. Anybody who wants to trade the shorter time frame has a possible setup here as well. So we have a 5-wave move up from the 23rd of January lows. So again, you know, whenever we have, let's say, a correction, we need to see a first 5-wave pattern on the smaller time frame to the upside to have a first confirmation, ideally also above resistance, to have a first confirmation that the trend is continuing to the upside after a corrective pullback into the support area, which, as I said, probably ended on the 23rd of January. We have a 5-wave move up and currently a nice corrective looking pullback, or at least consolidation. I will take the orange trend reversal area out. It worked out. We don't need it anymore. So that gives us here 2 micro patterns basically that could play out. I'm ignoring at this stage this wick, which happened only on Coinbase. It was quite an interesting one. But basically that you could say that wick was filled again, right? Price did trend a little lower yesterday. So the situation is we have a first corrective move down into micro support. I've got a micro support area here between 77.6 and 71.9 cents. This is the important micro support area. Basically what we see in large with a larger yellow box, which is the support area for the reversal into a third wave on the larger time frame that could then trade towards $2.12, maybe even $3. This here is the smaller one, just relevant for this individual 1-2 setup, which means that if we get a sustained break below support, below micro support, it will likely lead to invalidation. That means that wave 2 is likely still unfolding and could just, oops, don't know what happened here. That wave 2, okay, I can't grab it. And it could reset a little lower, possibly around 66 cents, 65 cents. There is plenty of support left. But at the moment, I'm watching if support can hold. We are above micro support. We have a 5-wave move up, which adhered to relevant parameters. Okay, and the pullback could either be an A, B, C structure in white, in which we might go a little lower, possibly to 75.4 cents or 73.8 next. Yeah, because these are specific targets. The yellow box is general support, standard Fibonacci support for a wave 2 pullback in white. Whereas the white box there is the actual target for the C wave. So there's no need to get there. You know, honestly, it could turn around at any time, but we'll see. It's now basically in a support zone. The lower it goes, the lower the market offers, the better the reward to risk ratio for a long trade. In the orange count, we have a potential micro 1-2 setup, and we could say that possibly this wave 2 is already finished, because this move up is also a potential 5-wave pattern. So they are both bullish, they both allow a pretty direct breakout to the upside, but the orange count, which is already a step ahead, is getting invalidated round about below 76.5 cents. It offers a fantastic reward to risk ratio with a very tight stop. But again, we might just get stopped out here out of orange, and it might reset a little lower, and the C wave is still unfolding. It gets more and more likely that wave C is still unfolding, yeah, which would be okay. I mean, we haven't broken below this support range. So for me, it's as long as we're holding that 71.5 cent level. 1 second, just need to double check something. Yeah, as long as we're holding that 71.5 cent level, I focus on higher in the very short term. But again, still give it the market that space to potentially come down to that level to test those lower support regions. This is also where we have previous structural support in that price range. That's my update about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.